ChargePoint's second quarter earnings are out. For those who don't know, ChargePoint is the operator of the largest Level 2 EV charging network in the world. No matter what your views are on where the charging market is headed, you can't deny ChargePoint's lead here. They've continued to have exceptional growth and just grew their total revenue by 93% year over year this quarter. They've also passed a new milestone, reaching over $100 million of quarterly revenue for the first time. And just as a disclaimer, this video is for informational purposes only and is not financial advice. Now before we get into the numbers, I think it's worth talking about what really sets ChargePoint apart from some of the other companies in the EV charging market. What really makes ChargePoint different is its business model and the revenues that come along with operating on that model. ChargePoint doesn't own the ChargePoint stations. They sell them to organizations who go on to operate them. These are oftentimes businesses that are interested in attracting more customers. This model that ChargePoint operates on is different from many of their competitors who choose to operate the stations themselves. These companies are focused on earning long-term recurring revenue, but they do it at the expense of nearly zero revenue up front. EVgo does this, Volta does this, Blink does this sometimes, and a number of other EV charging companies operate with this station ownership model as well. Unfortunately, as a result of earning nearly zero revenue up front, this model requires an immense amount of funding before there's enough revenue to sustain the business. This is where ChargePoint differs. Since they sell the hardware, they are earning revenue up front. Now, a lot of you may know that ChargePoint does have recurring subscription revenue as well, but 78% of their revenue this quarter came from their networked charging systems category, which is basically the sales of charging station hardware. Only 19% of their total revenue came from that subscription category, which includes cloud plans, their Assure maintenance service, and ChargePoint as a service as well. Under 4% of the revenue came from the other revenue category. Altogether, that puts ChargePoint's Q2 revenue this year at $108 million. Taking a look at ChargePoint's revenue growth by category, we can see that their hardware revenue is growing a considerable amount faster than subscriptions. Hardware sales grew 106% year over year, while subscription revenue grew only 68% year over year. So that hardware category is what's really driving that 93% year-over-year growth that they had for this quarter. ChargePoint's gross margins improved this quarter as well. In the past, their non-GAAP gross margins were around the mid-20%, but fell pretty sharply in Q1 this year due to supply chain issues. Those margins were at 17% in Q1 and 19% here in Q2. We can see the effects of these lower margins when taking a look at their cost of revenues. We see that these past couple of quarters, those costs have been growing faster than the revenue itself. This is something that will hopefully be improving over these next few quarters. ChargePoint guided for full-year gross margin of between 22 and 26%, which would mean that their margins will need to be a lot higher for the rest of the year. So ChargePoint definitely has a lot of work ahead of them to get into that mid-20% range of gross margin for the year. They did also give some guidance for the third quarter. They guided for Q3 revenue to come in between $125 and $135 million, so around 100% growth year over year. They also guided for full-year revenue to come in between $450 and $500 million. That puts us on track for Q4 revenue somewhere between $130 and $180 million. That's definitely a wide range, but it'll probably come closer to the middle. My guess for Q4 is that the revenue will come in between $155 and $165 million. But again, that's mostly just going off of ChargePoint's guidance. The last piece of guidance they gave was for operating expenses to come in between $350 and $370 million for the year. But during the question and answer segment of their earnings call, they did add that they are expecting to be in the lower half of that range, so they're expecting to land between $350 and $360 million of operating expenses for the full year. A few other things that ChargePoint mentioned during this Q2 earnings report is that the majority of their hiring was for infrastructure positions. Obviously, we know that ChargePoint is very focused on expanding their network as quickly as possible. They want to get as many stations in as many places before other charging networks get there. There was also a question on the earnings call about how ChargePoint was going to fulfill the demand for EV fleet charging. The CEO, Pasquale Romano, his answer was that EV fleet vehicle production will still take time to ramp up, so there won't be a big burst of demand that ChargePoint won't be able to fulfill. He said that for their fleet business, ChargePoint isn't limited by the supply chain at this time, they're limited by that EV fleet vehicle production. They have the capacity to deliver more fleet stations as more EV fleet vehicles are produced. Now, taking a look at ChargePoint's balance sheet, we see that their current assets are at $680 million right now. $284 million of that is actually short-term investments and $188 million is cash. Their long-term assets are at $366 million. For companies like EVgo and Volta, you'll see that their property and equipment line makes up a much larger portion of their assets. This is because those companies own their stations, and this line is where the value of those stations they own are found. So, since ChargePoint doesn't own their stations, their property and equipment line isn't as substantial as it is for EVgo and Volta. Moving down, we see that ChargePoint does also have $206 million of goodwill. This came almost entirely from two acquisitions that they've made. The first being their acquisition of VeriCity for $79 million last year in August, and the second being their acquisition of Has2Be for $232 million in October last year. Moving further down, we see that ChargePoint has $654 million of total liabilities. $239 million are current liabilities, and of their long-term liabilities, $294 million of that is long-term debt. I've got a more detailed overview video of ChargePoint, so go watch that next. That does it for ChargePoint's Q2 earnings, and I'll see you in the next video.